Good morning, guys. Welcome to this Monday, September 22nd. And I guess it's the first day of fall, right? So the Labor Day, we start switching. I guess this is the official first day of fall. And yeah, great. We're in fall already. If I don't want to stress you out, we don't have like a few months left until we hit Christmas, just so you know. If I want to stress you out a little bit. So Christmas is right around the corner. Anyway, so going into today's trading, we had a nice little rally going into Friday. It's closed off pretty good. We extended, so we're still in that move out of the middle to the upside. Overnight, so far, has been pretty muted. I think what's starting to lean on the market right now is going to be that government shutdown. So, I mean, if you haven't paid attention, I mean, I had a bunch of stuff going on coming up to this week, but now the big thing is going to be government shutdown if they can't fund the government. There's going to be a political fight and, the normal BS posturing and stuff. But it seems very much like the Schumer gang is trying to shut down the government. They've been, they're putting up like pretty ludicrous things pretty much just to get a no and be able to shut it down. It's what it seems like. We will see how the whole thing shakes out. It's all politics right now, so I'm not going to worry about and make any commentary about that stuff. But it's markets are paying attention now, and a few days, and we get into that part when the government is not funded, and if markets start losing confidence in part of that process, that nothing's going to happen. I think we may see a reaction. So keep that in mind. I think that's probably one reason gold is popping in the overnight going into the day, getting into that part. They had to get past the government funding part here. So, but we are still to the upside. We extended Friday. So right now we just pulled back a little bit, haven't really taken out the low. Just kind of hovering around the mean of Friday. News this week, we have we got a little bit going on. Not too much today. A bunch of Fed speakers, but nothing much going on in terms of news. Tomorrow we get current account PMI composite, Red Richmond Fed manufacturing. We have a 2 and 5 year auction, 5 and 7 year auctions coming up this week. Wednesday, mortgage apps, new home sales. On Thursday, we get durable goods, GDP read, jobless claims. And then on Friday, we get the PCE number, so a personal income number coming out on Friday, and that would be including that PCE read for inflation. So, all right, so Thursday, Friday, maybe the bulk of the news, but not much news beginning of the week to drive the market. So I think it's going to be dominated by this the politics around the government shutdown and how the market's going to react to it. The government shuts down, there may be a reaction in the market. So that's kind of what I'm thinking. To get started though this morning, there's no reason not to start from the long side of the market. We are still extending. Let the market show you when it's going to start moving. Initially looking to buy weakness against the 66.95s, the 88, 89s, 66.80s down to that 66.70s. So we have the 60s and 70s here on the lower end of the range. And that's the little attractor we have here before that little move to the upside we just noticed. So this little move to the upside to take out that high volume node at 66.70. I think we may have a problem on our hands. You're going to get confirmation below the 40s and 50s that is 66.40 and 66.50, these lower support areas. If those comes out, I think we are in trouble. So it's remember how it goes. They're grinding higher for several days now after the rollover. We can literally in a day reverse this whole thing and then some. So grinding higher, elevator down. So when the market loses confidence and you get a sell-off day, that's probably what's going to be happening. Now, how do you spot that? Well, you're going to start taking out some support areas. So always look at support areas initially, the early weakness stuff. That's where you want to be more aggressive. But if it doesn't work, you're going to run into one loser, then you just back off. Either that or you wait for a little bit more confirmation before you start before you try to get in the market. So stepping in front of it on the way down is usually not a high probability trade, or you have to be able to fade some heat. But on the way down here, I would be looking at buying against the 95s, the 86 to 88s, and then down to this 80s rotations back up again. If they start backing off more than that, I would be a little bit less aggressive on the buying opportunities. Still looking to buy against 70s and the 60s, 50s and the 40s. All those four support areas could potentially hold. And if all of them start coming out, I mean, you'll notice that if the 6670 comes out, you know that something is up. It's like at that point you want to be less aggressive buying. You still want just don't want to sell into support, but you don't want to necessarily have to be super aggressive about it either. So always going to be mindful. Keep that in the back of my head. That elevator down kind of a day when it comes, it usually to get you by surprise, and unless you stop trying to get long against the support, you just have a really bad day, you know. So you're a little bit less aggressive on the first entries on that early weakness entries, or you just give it a little bit of room and look for better entry levels. In other words, a retest failure of some sort for before you try to enter the market. So that's kind of the dynamic I'm looking at right now. But to get started today, starting from the long side of the market, no real news to drive the market. So we're going to see how the potential shutdown dynamics in politics is going to impact the market. So, and if they start taking this higher and looking for short against the 67.10s, 67.20s, and the 67.30s, all with a little bit of caution because we are still in the move out of the middle to the upside. Remember that we haven't really taken that out. So if you look at the we move out of the middle, it's extending a couple of days in a row. So when you're making new highs, and just have to respect that until you see it that actually failing. So looking to buy weakness to get started. Not going to be super aggressive on a short, even though the short opportunities may be there. And watch that 66.70. That comes out, I think that's when you need to be a lot less aggressive on the buying opportunities until you see a good base forming. All right, so that's how we get started. And let's see what the kind of day we're going to get. But the government shutdown stuff it could be like one of those triggers which sets the market off in a little bit a small correction here. Looking at the bonds and the Nasdaq. So bond market backing off a little bit. They have taken out that well, they're down here at that 1608 level. So they're right here at that level where they kind of have to hold it. Right, they're down here flirting with it. They probed below it a couple of times, so you can see here that 6608 is the one which really needs to hold, and they are right there. So I would be looking to sell strength, just look for early weakness to see if you can retest that low, maybe take it out. And if so, we may see them running right back here to the 114s, and that would just be yields coming up a bit and the prices coming down a bit. So looking to buy, or sorry, looking to sell strength early on, 1618 to 20s up to the 1624. Above 1624, I'm taking off that short bias a little or expectation for early weakness. So if I get early strength, I'm looking for short setups, but I'm looking for a retest of that low, maybe lower. And if there could be a buying opportunity here at the 1608. So this could be nice retest setting up. But they've been kind of grinding this higher. So depending on how the bond market feels about the whole thing, if yields are going to come high and go higher after Powell cuts, I see yet another kind of vote of no confidence in Powell, really. So we'll see how this whole thing shakes out. But I would watch the bond market pretty carefully. The bond market starts moving lower, yield starts heading higher. That would be a bad sign, right? So that's how we get started on the bond market. On Nasdaq, also backing off a little bit in the overnight. They made new highs the last couple of days, and nice moves to the upside. So far not extended in overnight, has backed off a little bit. So starting off the same way, looking to buy weakness against the 740s, 700s, 660s for rotations up. I would say below that 660 level, that would be taking off the long bias. You see the low volume area below it here. So below that 660, you have this low volume area. I think they can run it all the way, retraces all the way back here to 24.5 if they take out that 660 level. The London, yeah, Fridays or yeah, Fridays London low. So watch that 660 level. That comes out. I think we maybe have it retracing all the way back down into that 24.5. The low volume area could certainly be retraced. But initially looking to buy against these three areas. On the way up, it's looking to sell against the 820s and the 880s. Bit of caution. We are still in the move out of the middle to the upside, so you don't have to be very aggressive on the short side. But if we get a day, an inside day today, they can't extend. We're going to be entering stage two of the ES and NASDAQ. And at that point, we're looking for a weakness, see if they how far they want to pull this back, if they can't extend further today. So we'll see. And I've noticed the cryptos is in a big risk off mode right now. So cryptos are in a risk off mode. Gold is popping. We have a potential government shutdown looming. So yeah, there's a few things out there which could set this market off to the downside. Finally, oil and gold. So oil to the downside, heading lower. Not trying to figure oil out right now. It's been trading back and forth on various things, but needless to say, the structural move on oil is going to be to the downside. Overall, these new energy policies will drive prices of oil down. Yes, not in a straight line. So yes, you can tell they go back and forth. A little bit of rallies, goes back and forth. They have an event, maybe take it lower. And I'm just waiting for them to start taking out that 61, 61.30 level. If that comes out, maybe a little bit more aggressive on the short side, could have a nice down day. So far, overall day has been net to the downside. Still looking for buying opportunities against 61.80 and 61.30 to 40 here. These two support areas. Those are the last ones. After that, we are heading lower. So overall, starting off the day, it looks like we're getting some weakness. So let's see if they can hold on to that. So looking to sell strength against 62.20, 62.50 after that 63 level for rotations down. If they trade up above 63, you're taking off that short bias and going flat back range band again. We are down at the lower edge too, so I would be looking for buying opportunities against 61.80 and the 61.30 to 40 as well. See if either of them holds, we can see a nice rotation right back up again. So we'll see which day is going to be the day they start taking oil lower, right? And then finally, gold. This is the one which has me worried. It almost has me worried when it starts moving like that. So I don't know where gold starts moving. And it started Friday. We were trading at value. It looked like they were building value. Then on Friday, a nice move, took out the 36.95s. Didn't quite made it up to the first attractor. Now look at overnight, straight up. So either this is like an overdone extension to the upside, and we're going to see a hard retracement, or this is just the start of concerned about the overall economy and the government shutdown. So we'll see how the far they can take. This is a global market too, so there could be other stuff driving this more than just the U.S. economy and the U.S. government shutdown. Does not have to be the thing driving this higher. The fact that it is trading higher is the concern. So I mean, it's something brewing out there, something we haven't quite seen yet. So I always keep my guard up, if you wish, when that happens. I mean, look at the gold popping like that. So they're making new highs. Then they move out of the middle to the upside. So trade it as such. Look to buy weakness. I would do 37.50 and the 37.45 to start with. If they take out that London low, I would look for a retracement trade all the way down to 37.20. Could be a nice move to the downside. Could be pretty violent too. If this is just a probe to the upside, the reversal could be pretty intense. But anyway, I would look for buying opportunities against the 37.50s and 44.45s to get started. And if both of them comes out, I would stay on the short side or hop on the short side and see how far they want to trace this. So that's gold. So it's all in gold. So gold. So oil's looking for short opportunities, see how far they can take it on the downside. On gold, we're looking to buy weakness and see how far they can take it on the upside. And let me see how this whole thing shakes out. All right, back to the ES and Nasdaq, and both of them are still kind of where we left them. But as I said, today's if this is the start of a stage two development, we'll see how weak it's going to get. And watch these lower levels on the ES. I'm going to take off my long bias against the 60 after 68, 66.80 comes out. Below 70s, we are definitely thinking short term of the market in the short term. So yeah, probably want to push this. All right, so that's how we get started, guys. I would say good trading, and we'll see you back at 11:30 and see how things has developed. All right, guys, later.